Hey, what's going on, family? This is your boy MC Fire coming at you again with another video as it pertains to the Sunday night walkthrough, recap, whatever you want to say. We are diving in here trying to talk about the markets, my favorite topic, your favorite topic. That's why we're all here, right? So essentially, already starting to see a little bit of a V-shaped recovery as it regards to the market. But the major news that's really came up was the Fed decided to cut interest rates, but they limited the number of interest rate cuts going into 2025 to two instead of four. So if you're not aware of that, what does that mean? They essentially have said that they are looking to be okay with inflation as opposed to deflation, right? What does that really mean? It really just means that higher prices, higher asset prices, and essentially, if the market fails, it'll fail upwards in price. That what does that mean for you? That means that your assets probably will continue to increase, housing prices will continue to increase, and the sell of things will be competition will be fierce and will continue to increase. So it's going to be a squeeze on the consumer. That's not necessarily woes for if you're prepared, right? And so failing upwards isn't necessarily bad for the overall market. If you're invested in ETFs or major indexes, that's good for the overall market. But you need to kind of be ahead of the power curve. That means that getting assets on the low is good, and buying the dips is even better. So let's kind of dive right in. We're going to start with looking at the major indices here. We'll start with the Qs and we'll work our way down. So already you're starting to see a slight bounce. We're not out of hot water quite yet. If you notice, right, after the Fed's announcement, major sell-off. So definitely an opportunity to buy the dip there. But we haven't really gone anywhere new. If you notice, hitting fair value in this rotational zone and then bouncing above this um, level here. So if you're hitting fair value in this rotational zone being 505 to 515, hitting kind of the halfway point being kind of roughly fair value. That's kind of a guesstimate. And then if you are back above the 515.83 level, right? That's kind of positive news for the market. Yeah, it could have went down like this in a day, or it could have went down like this in a week. The point is, it went down and it respected fair value and bounced up above this level. We're not out of hot water quite yet because this thing could continue to fail, right? So you're going to be prepared for either way. But I really love Jerome Powell because Jerome Powell is making it to where the average Joe and the everyday guy has the opportunity to still get assets or buy the dips here, right? Or the market could just run away. So the reality is most people were like, the market's inflated. Most people were like, everything's super, super expensive. Prices are super expensive. So with this, prices are more likely to come down as they did with that announcement that he's making. He's keeping rates higher for longer. Okay, so if you're looking to be a consumer, right? If you're looking to be a consumer, this is bad news because that means prices are going to be expensive. If you're looking to buy assets, this is great because that means that the asset prices of things can come down as the market looks to kind of get ahead of the rate cuts, right? Essentially, people aren't going to get the rate cuts that they wanted right out the gate, which means easy access to money. Interest rates are being low, right? That's essentially what's going on. So we kind of covered that in previous videos. If interest rates stay higher for longer, that's less money sloshing around, that's less inflation. That's good for the consumer at the pump, consumer at the supermarket, as well as asset prices. Okay, but there will be a point when that gets priced in, and then the market will front run that and start buying anyway. So you really do need to catch buying on these dips, major dips, right? This is a dip, so getting options as things cross above here, stop out at the low would actually not be too bad at all, right? Friday was very interesting when it comes to buying, so we could see a V-shaped recovery very quickly. We'll look at the IWM, which is like the canary in the coal mine. Again, this is not too promising. So like when you see the other ones, The other ones being the Qs and the SPY. Here you go, right here, right? It's up in this rotational zone above this previous weekly pivot, which is shown here on the daily, right? That's really good news. And the SPY is like that as well, right? So if you're looking at its pivot, it bounced below in this rotational zone, and now it's up here, very, very bullish, right? We would ideally want to see it to get, like I said in some previous videos, above 648, right? We do not want it to reject that 648 level because you're looking at a nice head and shoulders pattern that could be completed at the test of 648. So this idea that it gets above here is really good. We kind of needed to push. And if you see already, the market is showing bullish signs in post market, but anything can happen, as we saw last Friday. It looks kind of bullish and then fails, right? So something to think about. If it pushes, then that's good, but we needed to get above 648. We'll go ahead and put the alert there. We kind of wanted to get above that level. That's ideal. Okay. IWM is our canary in the coal mine. So if it can get above this 226 level, that is all systems green, right? All systems go, all systems green, and it's a good look. Boom. If it doesn't, you know, it's gonna be a rough January. Let's put it like that. So you got Apple. Let's go take a look at our in plays. This is kind of where we do our long hand video. So bear with us here, guys. So we're gonna move this up here because this represents the highest that Apple has gone, right? Kind of relative highs here, right? So pre-market or post-market, Apple's already up to that 256.87 level. Okay, it closed at 254. So already showing extreme bullish signs of continuing its move. Very, very powerful after rotation and Apple launched. So shout out to Apple there. Nothing really to do. If you weren't able to kind of buy the dip in the danger zone, then kind of it's business as usual. And that's kind of what we're hoping for. If you have assets, business as usual, as the market tries to price in the announcement. We do have a Briva kind of in play on the negative side. So if we can get a break below here on ABBV, it'd be nice. And we'll particularly take a position to the downside, and seeing that on the weekly chart, it is in a downtrend, right? We would be looking for it to break below that 170.69 level and stop out if it gets above the 176.72 level, ideally. ABT, kind of very similar story as it looks to set up probably for a trend change, because this is a lagging indicator that this actually could develop into a downtrend, especially if we see a break below this certain setup candle that we have in there currently. So break below 112.51 is ideal, and then stop out if it breaks above 115.12. Okay, this is for ABT. Not too bad there. Okay, ACN. Kind of liking what I'm seeing here. Pretty deep pullback on earnings for ACN. Unbalanced volume starting to switch to the upside, coming off of a pretty nice rotational setup there. It's really rotational. So looking to get a break above here that you could probably take, because if it fails, it'll fail back right here. Essentially, if it'll fail back to fair value, giving you an opportunity. If it breaks below that, you could see it complete the rotation. We would want to let it go anyway. So it's kind of looking green right now as it stands, right? We've got a unbalanced volume starting to switch to the upside in a very long uptrend in rotation. Tapped one rotation, or starting here, look at 1, 2, 3, 4, and then 5. So it's tested the bottom at least 1, 2, 3 times. Make that 4. Tested 4 times on the top. Tested 1, 2. So a couple tests on the bottom. It's anyone's ball game, but my assumption is buyers really like this level at 346.15, and that if we can get catch a couple of these guys off sides here, especially at the top of the range, we could see a launch of ACN. That's the hypothesis. If it breaks below here, my hypothesis is wrong. I'll be able to take my length. Now, granted, this is post earnings, so the play is definitely valid in that case, in my opinion. Adobe. So Adobe is has been kind of struggling. There was a very clear setup candle here, break below the low, stop out at the high there. Didn't really manifest where we could jump a hold of it unless you bought it right at the open. But essentially for us that's chasing, we wanted to get it kind of up at this level of 540.45. So if it broke below that 540.45 level, we wanted to be a buyer. Unfortunate or a short seller buyer, essentially buying a vertical. But because it failed through that level, gapped, wasn't looking for that kind of risk to reward there. So it didn't end up falling through and getting a blowout candle here, kind of at weekly 3 ATR anyway. So look for a bounce there. I would not necessarily look to take the reversion to the mean trade. If you do take that trade, essentially play it like you do any other setup. This right here is your play. You take the buy, stop out at the low, and only take it to when it touches the 8-pair moving average. Essentially, you just wanted to get a reversion to the mean, very similar to this. Take the buy, stop out, or take your profits at the 8, make a decision, roll, take profits off the table. Right, it's a reversion to the mean trade. The mean not being 21 on the weekly, the mean being 8, the 8-pair moving average. Right, so that's really, we want to be a little bit on the safe side for reversion to the mean trades. ADP, not really much to write home about here. You could say if it breaks above that level on Monday, be looking to take that buy on ADP, but not necessarily one that I want to necessarily take as of right now. You do have a setup candle on AEP to the downside. So ideally, you'd want to take this rip into the wave, into the moving average cloud, and it fell through, right? You didn't really get an indication there on the first go. I'll go ahead and mark that for you, kind of show what I'm looking at as regards to that. So if we take this, the earliest indication of the downtrend there, right post earnings, there was an indication to that the trend was changing, but there was no real setups on the rip, so you wouldn't have been able to catch that. The play has already kind of moved. It's very far away from both the 21 and the 8-pair moving average. So if it looks to revert to the mean, that kind of takes away our edge, not looking to something that we want to play. Setup here is, let's see, we have enough juice on this. Yeah, so setup here is definitely valid, right? If your breaks below that, you could see a breakdown and a little bit of possibly a position. This is one that I would want to maybe do a butterfly, because ideally I'd want to short the rip. So it's in negative territory. It rips up, and let's say a setup shows up here. Buyers get a little extended at this side, getting set up, and then we take the position to the downside. That's kind of what we're looking for. We're not necessarily looking to short at the bottom of moves. We want to short the rip for maximum effectiveness. AMD is getting to the point where I'm starting to have a buy bias, right? AMD is a long-term chip manufacturer, so we're gonna walk down the alert there, and then we're gonna expand the weekly for the AMD here. So let me tell you why my idea of being a buy bias on AMD. So AMD, if you don't know already, is a long-term chip manufacturer, right? We would love to be a buyer at 119.21 for long term, right? We do want to see some like maybe a Harambe pattern or a reversal pattern of some sort. That would be nice, like a morning star or a hammer candle on the weekly, or see something on the daily. But ideally, this isn't a downtrend, right? AMD, as much as you might love the stock itself, clearly in a very clear and defined downtrend, and has been there that way for a hot minute, essentially since 422. Okay, so being in a downtrend, might be looking to take a long-term position, buy and hold, strategic long-term at 3 ATR. So if it gets down to 107, we would ideally like to be a buyer and assume all risk of what the stock does next. Essentially make a new plan at that point, but want to be a buy biased at 107 for AMD. AMGN. So AMGN, it's in, it's got a setup here, but it's kind of in the wrong direction. So we'll go ahead and bypass that there. Amazon. Now Amazon is one of those that's, hey, if it's leading the market in strength here. Looking at 3ATR, didn't have a very deep pullback on the announcement, just a slight pullback, and then almost immediately recovering. So that's kind of something that, yeah, this is all you got from that Fed announcement, and then immediately kind of recovering half of that loss there at the 50%. Most of the market, we talked about this on the last video. Most of the market, if it can break above that 50% pullback from the Fed announcement, that'll be extremely powerful. We'll come back to Amazon, but this is what I want to show you, right? This massive candle dropped. If it can get above the 50% mark, this right here is a test of that 50% mark. So we're not out of hot water quite yet. We want to see breaks above that 50% on that candle. It needs to be above that for us to say one way or the other. If not, we're in negative territory, but these are negative territories on uptrends. We want to find rips on downtrends and short that if the market is going to start going negative. We just switch lanes and hop on the negative train instead of the positive train, right? SPY is going to be same deal, right? Massive red candle breaking above the 50% mark would be really, really nice. It kind of tested that and then rejected. So not really necessarily looking to front the gun on stuff that's so volatile while the market is in flux. Now, if you notice the VIX, we got the VIX indicator symbol label here. It's at 1836. Let's go take a look at that. This is a fear indicator on the market. It has since started pulling back from its recent highs of 28. So fear is starting to subside very quickly from the fact of the Fed announcement. That could be extremely bullish for the market. Fed announcement basically making everything pop extremely high because the market wasn't expecting that. The market doesn't like shocks. So when we come back over to Amazon, and we're starting to see strength in Amazon and like Apple, right, on the daily. The market's already taken that news and it's kind of running to safety as regards to the big blue chip stocks. Amazon, Apple, you might see some strength in Microsoft. We'll go take a look at that if it's in play. ASML. So ASML is another one that I'm starting to kind of line up to get a buy biased in. Long-term chip manufacturer, but it's kind of here in the dumps, right? If you notice that we got ASML, we ideally would want to see to get down to 3ATR. Not sure if it's going to do that in the short term, especially if the market starts recovering and we can get our act together over here, right? Us being the United States and our chip manufacturing. But as it stands right now, what we see, we're trading what we see. Negative. It's got a negative on the weekly and the daily. The daily is, there's a rip here and follow through to the downside. So ideally, if we can break below this, expect to see rotational, kind of a rotational touch there. We'll go see if we can mark that rotation for you guys now. So there's your rotational zone. And let's see if it touches anywhere else below there. Okay, so we'll just mark the recent pivot as that rotational zone for now. Boom, there it is. Okay, so we see a break below, expected to complete rotation and touch down here. But ideally, we would want to see maybe a touchdown here for an absolute buy bias on this one, right? You kind of got to be a little patient when it comes to the buys, but when it gets down here, don't be afraid. Just throw what you got in there. Well, for us, it's don't be afraid to throw what you got in there to acquire some of these shares. If you can acquire some of these shares here, we can assume the risk. It'll be a long-term strategic risk. Ideally, we want to be selling at all-time highs or letting it go. But really, with the buy and hold, we want to just take on that risk. Take on the initial risk, and when it trend changes, add on to it. Not looking to really let it go. Ideally, it's not to over leverage it, buy and hold, and just kind of see what happens. ABGO, if you notice, this has been one of our favorites. Let's go look at it on the daily, right? Setup candle here, a lot of volume. It tried to peekaboo above this 228 level. So if it can complete the rotation, not looking like it wants to, looking like it wants to go ahead and fill that gap there. Let's go look on the flex screen and see what we got there. Showing some strength here, but we'll see what Monday holds as it stands right now. So yeah, if we can get back above this level at that 230, big psychological zone, that'd be sweet. But with this gap here, not really feeling it. I mean, it had this very nice rip that we capitalized on all the way from back here, rolling, 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 and then closing as it started to pull back on the follow through. So we made an amazing play. This might be all that she wrote for AVGO, but we'll see right here if we have another buying opportunity soon. You have to be a little patient. AWK made plenty of profits on AWK. There was actually a little bit more follow through all the way into Friday, but we essentially, the setup is the same. This is a setup that we got in here. This is what I'm talking about. Shows the rip. Let's go over here and take a look at the weekly. The weekly is negative. So you got to be a little patient with these setups, okay? The weekly showed negative, pushed, retrace into the moving average cloud with a setup here on this week right here. So once it crossed below that zone, once it crossed below it, boom, that's when we take our entry, right? We respect all of our sellers that was able to weigh in on that setup candle there, and then that's where our stop out is. So we respect all of them. It starts failing. We rolled it once, and then we went on and closed it at this blowout candle here, right? That's really all we kind of needed for a very, very juicy double there. So American Water, nice profit, very nice setup with very clean edge. AXP on an uptrend, right? If you know, it's in the stratosphere, but this very nice pullback here. We'll go ahead and, excuse me. We'll go ahead and lock it in here for you guys. If you notice, pullback into the wave. So you're kind of seeing the same setup here. Now it did get above the 50% mark. That is very, very powerful. So this one is almost a green light. If it can maintain this relative strength, cross above that high, these people are probably gonna have to let their positions go if they're short sellers, right? So looking to take that and maybe even break that towards high. The only reason why I would say even up at this level, take it with the stop out of the low if it happens is because the amount of strength that it has. And then we've seen things kind of go higher, but ideally, right, you want to catch it off the dip, right? Uptrend off the dip, take this by many days of follow through with a nice juicy blowout candle. You can actually make a decision here. And if you roll it, this is another opportunity to make a decision on the blowout candle there as well, right? So you can make that decision right before earnings, right? Looking really great. That would have worked out flawlessly, right? AZO. So AZO, kind of similar story, right? Uptrend, nice dip, right? Not really our type of setup candle. We want to see kind of red, but if you did want to take this play, no one would fault you for it. The reason being, you're still above the 8 period moving average in an uptrend, and currently right now, you're above this rotational zone at 32.53. So from the fundamental standpoint, you could look to see a retest of all-time highs. Ideally, and your risk would essentially be the same, right? You could take the break of the high here and then stop out at the low there. That's ideally what you could do. Now, AutoZone is definitely a little bit pricey, so make sure you act accordingly for your risk management. Boeing. Like what we've seen in Boeing, if you guys know, we're already locked into a buy bias based off bad news that we got from Boeing. It is in positive territory for us, getting our buy bias buy right there, as well as add on as it pulled back here, took the buy, and has since follow through. This is now in an uptrend, right? And this is kind of why, I kind of harp at the trading community so much in the fact that they don't point out certain things like this, right? They're so busy focused on one trick ponies, they don't really realize stuff like Boeing. There is opportunities in this long time airline manufacturer that you wouldn't otherwise get anytime else, right? They were struggling. They had strikes. the company's losing a lot of money. But this company is one of three airplane manufacturers, one based out of China, and there's Airbus for Europe, and then there's the United States. So there's not too many places where you can go get a commercial air, and this is one of those places. And if you look, been watching the news, there has been orders upticking in Boeing. So that's been coming across my news feed that Boeing is starting to re-get orders. They are working like kind of almost through the holidays, not quite, but they're turning and burning. So that means that because the stock is so depressed, we're already positive on our buy bias and then our trend change at. This is what I'm talking about for strategic buys. You might take a buy bias just to say, hey, I'm going to pull the trigger. It's going to be on my watch list. I want to see when it drops 5%, 10%, whatever. And then once the trend changes, take another buy. That's how we play this. It could rip past it. It could rip, take a dip. But at this point, I want to be a long-term strategic buy and hold, 50 years, 20 years hold kind of thing for this stock. So if it goes, right, you want to be a part of that. And then you can look back and say, see, I was there at the trend change at the beginning. I was all the way at the bottom, even if it was a few shares, right? BAC. So you got BAC here on the weekly. Nice pullback into moving average cloud. We did have a buy here. What is a sell here? I'm not going to kind of go over that, but essentially, nice little pullback in BAC there. If you want to be a buyer in the XLF, you want to get exposure to the XLF, BAC is actually a great place to do it. Not exactly the buy that we like to see. We kind of like to see a red setup candle here that gets washed. But if you have a buy setup candle, cool, that's fine. And you want to be a buyer in BAC like you're already averaging up or averaging down into this stock, right? You could take a buy at the breakout high and stop out your add-on at the low, right? That's what I would do. Or if you're, I mean, obviously, if you're going to be a strategic buyer, you're just adding at break and not looking to do anything else. BKNG, if it'll load, we'll move on. BKR. See if we can get anything to load, guys. There we go. So shout out to that. Baker. We're going to go look at the weekly here on Baker. Yep, very nice pullback here. We actually had a very, very nice run on the BKR. Not too snazzy, right? Buy here, roll here, close here, and then, yeah, or another roll. And then we just kind of let it expire worthless. But this is kind of ideally how the system works at when it's at its best, okay? Let's go back and dissect this a little bit. You're in an uptrend. Price action going into the moving average cloud was kind of choppy, kind of rotational. But we kind of got a heads up that this play could be potentially taking off. You have one setup candle here, which would be a stop out of the low. You could have used this as a potential add-on. We did actually make that our official because we weren't too sure, but we went on and took that position. And then the next couple of days, boom, very fat push, followed on by a little choppy action and another thrust kind of back to rotational highs, which we did rotate again. Kind of held it, but once you start seeing stuff like that, you can let it go. No one's going to fault you for letting it go after managing your profits. The idea is to get a setup to where you're not having to manage a major loss all the time because you already know what your stop out is. You're more likely having to manage your profits, working your profit, taking muscles. Do I take it off a rotation, blowout candle, or 3 ATR, or do I take it and roll it at the limit of my options setup? So if you got a 50-20 delta, 50-10 delta, I'm rolling it at the 10 because that's where my protection is, right? Shout out to BKR, BLK. Boom. Similar story. We've been in an uptrend now since 7-8. So any pullbacks into this wave is looking good, but maybe this trend has run its course. We'll see. As it stands right now, not the setup that we want to see, but if you see on the daily this rotational zone, I'm gonna go ahead and mark out some of these rotations on the weekly. It's probably easier. So we'll tag the weekly chart here for some of the rotational zones. So we'll put this here, boom, right? We'll also put the previous pivot previous pivot low there as a yellow, as a hazard. We kind of use it as a hazard if it's one touch, but it's the market kind of hit fair value or this or that. We just want to give you a heads up. This is where the stock actually could pivot, right, in the future. And then there's another one, right? Boom. And then we got all-time highs up there. So if we're looking at the rotation on the daily, this is kind of what we're looking at. Touch, kind of got close to it, touch, and then push back down here. So we can also mark this as a little bit of a yellow too, because it kind of touched here. But the reality is try to watch these green candles in uptrend, because sometimes they play out with nice rips, sometimes they play out with nice rips. Uh, but I really like the red ones because it kind of shows that hey, the market was thinking about going one direction with strength and it reversed. So the buyers are stepping in, and not only are they stepping in, but they're beating the sellers, which makes the sellers have to be buyers or they get run over. Right, they're already off sides. So as you see here, let's say you get peekabooed in there, you might take the stop out there, but if you were hesitant and look for the second buy, you'd be in, stop out at the low, it would take a run. We've seen a lot of peekabooing in this market where it would get you in. So sometimes it'll peekaboo up to your entry level, wait for it to pull back. A lot of times, what do I mean by that? So let's say, for example, you are looking to be a buyer at break of, let's say, this level. It might peekaboo up here, get you in, and start pulling back. If it pulls back, wait for the second time it tested again, that your entry level. You see it the first time, it might pull back, and then if it tests it again, then take the second. That's the second break on the 10-minute, like the 30-minute deal. City, look at City, right? In the XLF. So we love our XLF, we love our XLF, we love our XLF. City's pulling back pretty nice in a moving average cloud. Kind of what we want to see. If it breaks above this zone, you're clear of your head and shoulders pattern, right? It's kind of showing a little bit of a head and shoulders. Here's your shoulder, here's your head, and then if it pops up here at this level, it's a little bit of a danger zone, which is already done at 70.23. So I'm going to mark that in yellow. That is a danger zone for sure. It'll be a tight head and shoulders, but a head and shoulders nonetheless. You've got to watch it, man. Be careful. If it starts to fail, look out, right? Could be looking to close this gap here. So watch that. Also, we need to move him up to the highs there. Boom. So shout out there. We're going to put this gap close here as a danger zone. So looking forward to close that gap. Those are early signs here. So we see the level right there, but we're going to mark this as yellow. Boom. If it tests a pivot. So yeah, watch out for that on City. But if it can break above this candle, I think you're in the clear, right? Caterpillar. What's going on with the cat? So easy day on Caterpillar. It's on an uptrend. This is what you want to see. This is what I'm talking about on the peekaboo, right? This is a very prime example. So I will go ahead and mark that level on the daily on what you would have got for the alert for coming into Caterpillar. Right now, the price is at 366.04. If you think about that, awesome. But you on Friday got a trigger to enter the play when it broke the 369 level. You got that. You already got that trigger. So if you're in Caterpillar, right, and it's already pulled back below that, wait till, if you haven't got it, right, wait till it goes back up there again, because this will be the second time that it will have gone back up there, right? So what do I mean? If it peekabooed up here and then slightly pulled back. So now Caterpillar's the next day, if it continues this trend, it would be a good look. If it opens above, you get the alert. You say, okay, I can take Caterpillar. It's tested, pulled back a little bit, and re-broke. That is definitely confirmation that we could continue. That happens a lot. You peekaboo during regular hours, and then it might pull back. So wait for the retest. You can actually get a better feel as well. Let's go look at CB on the weekly here. So CB on the weekly forming a new negative trend. right? We love our newly formed trends. We just ideally want to wait for a rip into those trends with setup candles. Not really getting that, but there is setup candles. So there could be a major breakdown. And if there is a major breakdown of this, look for rotation. If you are aggressive and you want to take this play, still keep to your rules. You can bend your rules, but don't break them for sure. So if there is a break below the low, fine. Take the play, look for the rotation, take a base hit, very nice. But if it starts to get above this level here, then I would go ahead and look to let that play go, right? You don't want to get into the territory of looking at a rotation back to highs and it getting away from you. Okay, it's in the clear. There's no earnings necessarily coming up for this guy, so just keep that in mind as well. We want to take that play as a base hit, first sign of danger on that rotational zone at 260.85. CEG. You guys are seeing how we're doing this, right? We always kind of start on the weekly, higher time frame to lower time frame using fundamentals, but our edge is still the setup candle, right? Catching liquidity and doing that whole deal. So coming back, weekly uptrend, shout out to us for that, right? If we can get above this very nice setup after it's pivoting at these levels, we could potentially see a very nice rip back up to this level. It's kind of what we want to see on CEG. We'll get rid of this alert here, and then we'll go ahead and mark this right here. Boom. Right. So we want to see this setup actually. So I think we took this buy at one point, and then we ended up getting a stop out, and then it rips. Totally happens, but the setup here is in place, so it's not really a revenge trade. As more so is it through a new setup, and then we could see that, hey, this new pivot has formed and it's already tested that. So a break could see a very nice rip back up to that pivot high as a first sign of danger. Would be in the middle of this rotational zone, kind of representing fair value. That's kind of normal. That'd be a good time to roll, make a decision. One of our favorites here, we love our charter cable. I mean, massive gains on charter cable. If you look, it's still in a very positive territory on the trend. Kind of been that way since 617. Keeps kind of popping up on our radar. And we love talking about this stock. Why? Because the first time that we saw that the potential of this is immense when you add a vertical with the butterfly looking at to the left and finding a pivot rotational zone. So I'm going to zoom this kind of closer a little bit so you can see it. But essentially, once the setup candle was in play here and it got washed, we wanted to take the buy, but we took a butterfly also for the pivot. So we looked at the pivot with the top part being the top of the pivot being the center strike for the butterfly, right? If you know anything about butterflies, you're taking one buy, two sells, one buy at the top for protection. Anyways, so the two sell calls in the middle, right? You're getting theta decay. That's really good, and then you're taking the out of the money buy at for ours it was like the 361 level, and then we end up taking the other out of the money same distance away from the center strikes. I think it was like at the 400 or the 403 level, somewhere around there. So when it got up to here, it was kind of very close to our center strike at the 385 for the two cells on the butterfly. So when it got up there, we went on and just took that off. That's like 120, 150% return on investment right there. We also had the vertical. So once the vertical, we took a decision to roll our strike prices up on the vertical, and there was more juice on the play, right? Boom, it rolled up again. And then as it pulled back below our candle, that's why we rolled it anyway at the high. I was like, okay, I'm going to move my stop loss off. Any lower than that, we'll let it go. We let it go. It retested high and it continued to fail. So shout out to us for using the system and its edge, and it worked extremely well. Even if we hadn't rolled it, seeing this, we would have been taking it off on this red setup candle anyway. Get to avoid all of that. So shout out to us there. The new play here is you got to set up on the buy side here, but not necessarily looking to take that as of yet. Okay. Kind of got rid of a little bit of my list here. That's unfortunate, but it is what it is. I think we already talked about Caterpillar. We did. Let's talk about some Disney. So Disney's kind of in the same boat there. right? We're seeing Disney. Um, Unbalanced volume starting to go a little bit to the downside, right? And then when you look at the massive rotational levels that Disney has here, uh, we could see a little bit more downside risk, even though it is in an uptrend, right? So ideally, you want to catch the trend at the beginning of the moving average retest, right? It's coming. It's trend change happens here off earnings retest here. Your setups are going to be right around here in the cloud. Your setups are going to be here in the cloud, close to the moving average, right? Set up right here, right? You see very tight squeeze going on as it breaks above. The squeeze is already fired. If you know anything about the TTM squeeze, I'll bring it to the fold here. Just kind of show it, apply, boom. So your squeeze is already here. Boom. It actually showed you indication of a squeeze. Even though it was a little late, all this was squeeze. But while the Bollinger Bands are retracting into the Keltner channel, it shows that squeeze here, and then it shows the next candle that it fires. So you still get an opportunity as a heads up for the squeeze if you're looking at a squeeze scan or anything like that. Our setup kind of confirms that. So you can still take a squeeze play out of there and catch this Disney move, right? But you got a setup on you still got an indication on the squeeze. You got an indication on the setup candle that we provide. So it still works out pretty much trigger trade all day, right? We'll take the TTML. KVUE, loving that rotational price action for this guy. It is in an uptrend, but could be starting to set up in a downtrend. So you gotta watch it. Kind of cheaper stock there at $21. So look to maximize some leverage there. But you do have one of our weaker biceps. So we had alert here. We liked this candle. Shows signs of buyers, but it didn't really break above that. So so the reason why we don't just jump the gun just because of CS setup is because this happens. Look at this fat hammer candle in an uptrend. You think that there'd be some considerable follow through. Well, there wasn't, right? Buyers kind of got exhausted. It failed. And now we're looking at some really basic stuff, right? You got a gap fill, essentially, half gap fill here, and then it ends up filling the gap sometime later, right? So still testing this rotational zone. I'll go ahead and mark that for you guys in yellow. Boom, boom, right? So kind of getting down to that point right there. We'll actually throw this up here as well, so you guys can see what I mentally kind of already kind of processed a little bit. Boom and boom. Hope that makes things a little bit easier as you scroll through. You see a break push, and it starts to form. This retest is kind of where we made that pivot there. So you can almost argue that your rotation starts. It's kind of why you do top down analysis and not go backwards. You can kind of say, oh, it starts kind of like that, right? But if we go back here, right, you see there's your pivot for that guy, and then you can almost take a yellow pivot and put it right here, right? It's tested 1, 2, 3, 4, so you can almost put that zone as well. Boom. We'll throw that at highs. Nice. It's not an exact science. We kind of trade off the setup because that's what the market tells us is going on when buyers or sellers start to get washed, right? These levels again are invisible levels in space that algorithms sometimes gravitate towards to add volume, add power, add thrust into the play, right? As a good value buy. But that doesn't mean they have to adhere to them all the time. And so kind of completely leaning on as long. I don't tend to do that. I like to wait for the market to tell me, hey, people are stepping in, people are stepping out, and then going from there, right? That confirmation and waiting for those people to step in. MCD. So you got McDonald's, right? McDonald's is in an uptrend here. We're seeing, let's get over there and really actually just scroll over there. Apologies. Let's go all the way over. Setup candle. Nice rotation here, if you notice. Really kind of not really making the decision up or down. I don't like to take rotational setups. They're the last on the priority. We like to take uptrends and downtrends as a priority. But if those are you got some more trades in your holster there, you still got some still got some cash sitting on the table, then maybe take a rotational play, right? But again, look to the fundamentals, right? Look for it to complete rotation, or here, look for it to complete rotations to the downside. Once it does that, you've got your base hit. This might be a day trade or swing trade, but once it breaks the high, you're out of rotational zone. The trade's no longer valid. So MMC. So we've got, man, looks like a rotational breakdown. See what we got on the weekly. Maybe there's a position. Yep. Nope. That's exactly what I thought. So um it's switching to a downtrend. And ideally that's good. We like to be in new downtrends as they pull back up into the moving average cloud. Breakdowns of the downtrend, we can't necessarily tell the future. So when it's over here and this is developing, you don't really notice that it's in a downtrend. It could, when it gets down to this level, reverse. Because these indicators are lagging, this would now go green. So mating till it defines the trend, then retest is when you take the trade. If we can get a rally back up into the moving average cloud on the weekly, and then there's a failure, that's what we would look to trade. NVT. NVT. So on the weekly, right? Unbalanced volume is not looking too hot though. This could actually be a trend change, but we are noticing that it is respecting immediately on this week right here. It is respecting the rotational level there. So ideally, right, if it respects it, you could see this as a rotational player, buyer stepping in like they did here, but I'm not convinced, right? I'm not convinced in this very volatile market that buyers are just going to step back in just because it hits this rotational zone. Ideally, I'd want to see more of our setup, maybe even a break here. This trade is almost not even trigger valid because you're already on 1, 2, 3, like 2 more days, and trigger not valid anyway, at least for my edge. SPGI. Right, throwing a nice little retest setup candle there. Let's see if it's in the moving average cloud. It is not. So it's kind of low, but we'll see. So let's go over here. I'm gonna see if I can show you. That's 8. Can I? Or this for the? Oh no, 'cause that's for the axle, right? Okay, we'll apply that. What I was gonna do is I was gonna throw in here your moving average like from a different time zone. So you can act there's actually a way we bought these. So there's a way to put the weekly moving averages on the daily daily chart here. Let me see if I can find that for you guys. This is one of these days that we kind of take a little bit more time. So I'm gonna do that for you, right? Let's HFT. EMAs. I think this is it. Let's fix. Yeah, so we could put the weekly on here. We'll put the 8. We'll mark that as a green. And then we'll put another one, and that'll be the 21. And we'll mark that. Well, first we need to put it on the week. And then it'll be the 21, and it'll be red. And we'll go ahead, instead of making that 5, we'll make it 1. And instead of making this one 5, we will also make it 1. We don't want it to the line to be extremely large, right? So we'll apply that, and now you have essentially your weekly 8 period moving average and your weekly 21 period moving average on the same chart for SPGI, right? It's not exactly an exact science. Remember, these are exponentials. I think this one is exponential, one is simple. Let's see if we can modify that a little bit. Oh, it's saying moving average cloud. Why is it saying that? Fast 8, exponential, slow 21, exponential. Yeah, this is on the weekly. Shows 21. Thanks for bearing with me, guys. Yeah, it's not sure why it's showing. It should be showing the green crossing below that one, but it's saying the moving average cloud. So we don't want to plot that. But anyways, we'll take it off, and then we'll definitely play with it later for sure. We'll hide that, apply. Okay. Yeah, we'll come back to that when I actually have it set up. But essentially, we can put a um, higher time frame moving averages on the lower time frame, and they actually show right. That's can be visually helpful. So we have striker here. What's something that we want to do for the striker? Don't I definitely want to be a buyer here in this uptrend. We did make money on SYK, and you kind of see the arrows here coming out of the 8 period moving average and the moving average cloud as it popped above the 8, looked to be a buyer, and made off like a bandit, right? But as it crossed over here, took the buy, stop out the low, right? Never really got stopped out, ripped, blow, candle here, took the roll, popped up the high as it came back down. We went on and took it off. As it kind of goes back, if you notice, once it kind of breaks below here, kind of fizzles out, right? It does kind of try to retest, but the fail, you don't really get more on this play, right? You could say, well, I can hold the high, but I mean, you have to be on your chart all day. Once we kind of see this blowout candle, there's another opportunity for a blowout candle. Once you kind of take that, then you're kind of done, man. Like, you got your base hit, you got your double. If it goes for more, also that's why you rolled it. It didn't. You take your remaining money home, and play again another day. And then you notice it ends up failing. So it's not like I told you so, but it is like a hey, heads up. If it rolls for more, you have the option because you rolled it. And if it doesn't, don't be this is where you get to say, don't be greedy, right? So to speak. But yeah, taking that buy here is pretty nice for SKY. They did get washed. These sellers did get washed, but I'm noticing this large candle right here. Not looking to just take that. We want it to go at least above 50% and not get rejected on the large Fed meeting candle. So that's the trade theory there. This is good. This is good, but we want for us to get in it to go above the 50% mark on the Fed candle and still use this stop out at the low. TNT baby. So you're looking at a weekly, very very clear uptrend. TNT is in the XLC, which is another absolutely boomstick when it comes to comparing it sector wise to the SPY. Right, XLC sector wise, XLF has been above recently, and it's okay. So anything in here has been pretty much gold anywhere you touch it. If you're seeing here, we want it to be above, again, the Fed candle. That's kind of been the theory. So if it hasn't broken above its Fed candle pullback at least 50% of the way, these setups to me aren't really valid, right? There could be considerable falls to the downside, and we want to see real strength here. Same thing for TJX, excuse me. It isn't an uptrend, yes, on the weekly, but the Fed candle actually didn't materialize that heavy, and actually the next day it kind of relatively bounced above there. So wouldn't mind seeing a peekaboo retest break for the buy there, and then a stop out at the low. Like I wouldn't mind taking this play at least for it to complete to rotational highs. Seeing that this is well above its rotational level, especially on the daily, we'll mark that out for you here. So testing this pivot zone here is, I like that. It's been in rotation, boom boom. Up here, rotate down, kind of test, rotate up, retest fair value, and then break run, right? So this retest with a break above high, well within line of fundamentals. We love that kind of stuff. It's flawless, right? Really, really flawless stuff. And with the Fed meeting showing relative strength the next day, that's good. But we want to get this peekaboo retest knocked out for us to take that play. Let's see if it's already making moves that direction. Yeah, see, uh, Friday post market, it already is kind of moving up that direction. So just hold out for that. This is definitely one we could watch. TGX, we could definitely watch that break to the upside for potential retest of the highs. If it does, right, we get to take that position to the high and stop out at the low. TT. So we're looking for TT, right? This zone right here. Sorry, guys, there's a train in the background. Choo choo. We've got this price action going as it retests that level there. Okay, I marked that out for you guys. Also marked the pivots on the high side and the all-time highs. So we'll kind of get a graph of what we're dealing with. You guys can see what I'm seeing. Boom. All right, and this is obviously red. We'll go ahead and change that too. You guys can see how I set it up. I like to make these a little longer, so you guys can see what we're doing. What you can see what traders kind of do behind the scenes on their Sundays, Saturdays when they set up the market kind of deal. But yeah, TT not looking too hot, especially it is completely designed. I'm not necessarily looking to be a buy biased right here just yet. You could say, okay, you could be a rotational buyer. If it breaks above high, stop out the low. Shout out to you there. We'll actually mark that. Not something that I'm interested in. I'd rather prioritize uptrends and strong downtrends. But this could present itself as a rotational buy, right? Here it's a little different. You got a setup down here off the post earnings, right? So you get a drop post earnings, follow through, or a setup candle with no follow through, and then a break of these guys right here. So you take the buy and it absolutely rips, right? That's kind of the idea. So you could look to take the rotation at least up to rotational levels at 406 where you need to make a decision, right? But I would still need for it to break at least that high with a stop out of the low, or you can even stop out below here, right? Being a 2 bar professional. But outside of that, I'm not looking to do anything else with a rotational play at this time. TTWO. So TTWO uptrend. Shout out to the uptrends there. Would look to want to see it get above that Fed candle. No ifs, ands, or buts. You're already there's probably more to the downside anyway. For it to complete rotation, it's already kind of down here and falling through, so we will want to wait for that anyway. To the downside to give it more. TXN downtrend, nice rib. Ideally, we want like heavier rips. I mean, I cannot emphasize that enough. These rips are very shallow, which represents the extreme weakness. When plays start to fail, they really just kind of just go. They don't really give you an opportunity to rip and then take the play. They're just kind of there, right? So you're seeing setups to the downside there. UNH. So a little bit about UNH. We kind of got a buy biased buy for UNH there. Yeah, it is currently in a downtrend. But if you notice, we're looking at a 3 ATR buy bias setup as it stands right now. So 3 ATR buy bias setup. It has respected this level before. It actually respected it on the bounce last week. So felt comfortable taking this buy bias along with the bad news, along with this setup getting washed over here. All these other red setup candles didn't ever get washed, breaking their highs, but this one did, and it threw a nice like morning star there. So as orders kind of build in this area, if these guys kind of get off signs, we could see a massive rip on UNH, right? And that's kind of what we're looking for, kind of like a gamma squeeze kind of deal, ideally. UNP. So Union Pacific, which probably was rolling behind me. You've got it in a downtrend, right? But it's more of a choppy trend. And what do I mean? We'll go ahead and mark this very, very, very wide rotation for you. Here's the rotational low, and here's your rotational high. So it's pretty wide. Okay, pretty wide. So my biases, as it gets down to this rotational low, which it kind of did last week, then you could look to take a buy with a proper setup, right? So here's your buy, break of high, stop out at the low, ideally, or really stop out below the break. So the risk to reward is extremely good if you can complete the rotation. And not something that I'm looking to be part of right now. Not really looking to be part of rotational setup. But this is pretty bullish, in my humble opinion. Being that this is a rotation, basically barcoding sideways, and then you get the Fed meeting candle. If it breaks above that, you already have a pretty highlighted setup candle on Friday. So I believe the market wants to, for Visa, make that a reality. Remember, this is the kind of the holidays where everybody's out here playing around on the folly day. But not really, again, this is one of these things, man, where you want to be in at the beginning. You want to be in at the retest, not up here. So I'm a big stickler of buying at the opportune position. I'm gonna go ahead and mark the trend and tell you why Visa doesn't even make sense to take a buy here, even though there's a setup. Okay, we're seeing a lot of this at highs, but I don't want you guys to get caught up. Just because I'm putting the alert at highs doesn't mean that's the play. The play for us is around here. Let's go back. Let's take a look at it. That's your play. It's pretty obvious, right? New uptrend, nice rip. Then there's a pullback. There is a pullback. Wait for it to come back and pick you up. That is the message. Just wait. Be patient. You don't have to be part of the trend change. You can be part of the pullback. And look, let's say you take the trend change, you take the buy here. Your alpha is here. Look at that alpha. Look at how much you're getting, right? If you take the trend change, that's at 276. If you take the buy, you get slight alpha at 274. $2 of alpha on the break, right? And you get an opportunity before it rips against you, right? There's your buy. Stop out at the low. Doesn't get stopped out. Runs, right? Boom. Kind of continues on. Looking great. And then you get a blowout candle here, blowout candle here, blowout candle here potentially. You could take any of those three, roll to the upside, and then have your profits and all that good jazz. But that's kind of the message. I don't want to be buyer at 3 ATR. I want to be a buyer on the dip. Buy the dips, short the rips, right? Keep that keep those words in your head and you'll be fine, right? We've got Vertex. Yeah, Vertex, clear downtrend. Trying to peekaboo up here for the uptrend, but kind of sustained downtrend. If you're noticing that there is an opportunity here, yes, at 3 ATR, for looking at the pivots, we'll mark the pivots up here. Bam, look at that. Pivots, baby. If I can mark it up on my chart, that'd be nice. So yeah, kind of respect this pivot bounce, right? And it respects it. That's good. That's the only other like confluence that you get for maybe a bounce here. So you're seeing orders starting to stack. You could say, okay, orders are starting to stack. Oh, I don't want to do that. That's bad. So as massive setup candles happening here in the open, right? People are looking to step in here. If you can break above, just look for the rotation, right? Look for it to close the gap. Pretty high caliber setup, but you could take the stop out at the low. We like this one only because of the amount of respect that is showing over the last 2 days. After the Fed meeting took an absolute hit, and then you see the amount on Thursday and then that Friday that people are stepping in kind of on the upside. So we want to take a buy if it breaks above and then a stop out below there, right? Yeah, it's really fighting its butt off to stay at that level. So kind of the idea. Let's go. I guess it's a T-Mobile. Yeah. So a little bit of T-Mobile heat there. On the T-Mobile kind of peekabooed us in there. And that's kind of what I'm talking about. Once you get peekabooed, it might be best to just wait for it to double peekaboo you in there. It'll peekaboo you in, wait for it to slightly pull back. Because let's go back and look at that arrow there for the lesson. Losses are lessons, so we do want to use the loss as a potential learning opportunity. Go back to our arrow. Yep, absolutely. Yeah. So if you notice where we are compared to where the moving average cloud is, especially on the 10-minute, you're pretty far away from that moving average cloud. And even when we look on the 2-minute, where are we at, right? Very extended away from VWAP into two standard deviations territory. So if you're in two standard deviations territory anyway, ideally you'd want to wait for a pullback in the VWAP, and then that pullback in the VWAP, if buying steps in and then breaks again to the upside, then ideally yes, you could take that position. So either way, still kind of getting caught on the chase there as opposed to waiting for the double peekaboo. Don't really get the double peekaboo. Kind of goes in, breaks below the low, and then never really kind of goes back up to that trigger point. So it triggers us in, kind of hovers above the trigger, fails. Never the next day or anything like that gets about of that trigger. That's what I'm talking about. You got peekabooed in. So we get peekabooed in. It happens. But then we had to get stopped out around here. And using our rules helps us avoid all that. So we got out at the beginning, avoided all that loss, and we can live to fight another day. That's kind of the essence of trading, right? But as we see here, um, wanting to get above that Fed meeting candle, if we can do that, at least 50%, we're out the clear. We'll probably potentially take a buy on this play and then stop out at the low for Mr. T Mobile. There's a lot more of these that were not on here before. They kind of took off some of my ones, but there are some here that we missed. So we'll go back up. SYY. I think it's rotational. Yeah, it's saying a buy trend, but definitely rotational and not really throwing the kind of setup that we want to see. So we'll bypass it. STZ. I don't think we did. We might have. We might be in it all currently. Yeah, we might be in it currently. So let's take a peek real quick. The monitor tab. Yep, we are, right? And it's up 17%. So shout out to us. So yeah, we got into this play. We felt pretty confident about this play. Considering that if you get in at the break and then it breaks rotation, you could look to see complete rotation. And this is a pretty juicy sign here. This is almost a blowout candle. So if we can get some more follow through, that would be nice. We'll see if we got a little follow through here. Not too much. There's a big battle down here going on. So hopefully sellers can continue to test this low. But we're just gonna kind of wait and see for Constellation if they can test that low. That's on the daily. So let's go to the weekly. Ideally, it's not anywhere close to 3 ATR, but yeah, as it stands right now, up 17%. We're looking to hold at least till it hits that pivot level. Make another decision to potentially roll it, and then 3 ATR is kind of the target. But if you notice, it's already kind of peekabooing at rotation. So this might just be a base hit, man. We just might see. We'll take it off if we see any signs of danger. Sign of danger would be kind of breaking above the high of that candle there because they're so pronounced as a setup. We would think that with how pronounced it is, it's gonna fall through. If it doesn't fall through, we'll just take our base hit 10% and keep it pushing. Yeah, there's a lot that showed up here on the back end. So SCHD, definitely want to cover that. Want to be a buyer in SCHD. It is a name that's been circulating around in the investment community now for a while. With this nice pullback, the dividend for it is pretty good. SCHD, a lot of people like this. So looking to be a buy bias at this rotational respect off the Fed meeting. But essentially the same thing. You get a peekaboo here on this play, but we wanted to see it to get above that 50% on the Fed meeting. Starbucks getting slaughtered. That's pretty much the order of the day for Starbucks, right? Follow through that keeps falling through. Even during what you think it would be peak season for Starbucks. On the weekly, not looking too hot. It still is an uptrend, but probably looking to change to a downtrend, right? Breaking through this rotation, hitting fair value. Look for it to continue down to 83.51. Not looking to make any decisions before it gets to that point, anywhere close, because pivot rotation isn't effective. So just watch out for that. Palantir. Let's talk about it. Palantir. Jeez, man, I love this stock so much. We are in Palantir, showing massive strength off that break there. Um, we would want a little bit more of a pullback in Palantir, kind of getting back into the moving average cloud. But as it stands right now, for us, it's just a hold, right? We have quite a few shares in Palantir still, even after we scaled out a couple times to take profits. Liking this stock, liking this showing the strength here. The fundamentals, if you watch some of our other videos, the cash to debt ratio for this defense contractor and its ability to use AI makes it a household name, a name brand, as well as it's got a great CEO, got a decent board, and the fact where the company is going has already shown a lot of promise. The cash to debt ratio is some of the best I've seen. The revenue growth, EBITDA, all of it's looking good. We've been a long term buyer since around what is it, 725. Took some more buys on the trend change, massive buys on the push. So basically, catching this at the immediate trend change. Been watching it for a couple of years now. We've been watching it since almost the beginning when I was a novice trader, right? But we've been watching this one. It's kind of been in the throes there. So big money on Palantir. You've got PH and okay, we already talked about Parker. Progressive. Gotta stop out on Progressive. Yeah, it happens. We'll go take a look at losses or lessons here. So we did see it take a little bit of a dip, buy, and then just continue to fail. That happens, guys. But if you're a one bar professional, two bar professionals at max, once it breaks this rotation, yeah, you're done. It breaks, and then it kind of retest that, and it starts to fail again. So you get to avoid that. You get the pleasure of following your rules and saving some of your hard-earned cash, right? Oracle. So you got Oracle here. Let's go take a look. Excuse me, O'Reilly, not Oracle. On O'Reilly, you get a nice pullback into the wave there. So not looking to moving average cloud there. Setup not ideal. We want to see the red one. But if you wanted to, like if you were convinced that this is the start of the rally, I'm not. But if you want to say that, fine. I would wait for it to cross at least above the high, and then stop out if it goes below the low of that candle. Right, that's ideal. Now we get to Oracle. Apologies. So Oracle here, nice inside of the moving average cloud. That's ideally where you want to be a buyer, man. I'm telling you right now, buying that dip. Um, Not the setup candle that we want to see. Ideally, our dips are like this. These are what our dips look like on Oracle, right? Nice red setup candle, crosses above, very with some nice follow through there. Right? If you go back to the weekly, it's kind of what you want to see, man. Pull back with a red candle, right? Not really a green one. You could take the same setup that we showed you on the other one, right? Take a buy here, stop out at the low, because the only other confluence we have is this pivot level, right? And if it's respecting that pivot, it could push. Look for it to close a gap, first sign of danger, or even take it off at the pivot, at the previous pivot. But really, I'd be looking to take the gap close, ideally. NVO's on here. Why are they watching my list up, right? The weekends are always interesting for my in playlist, right? One time we made an absolute killing on NVO, but has since changed trend, right? In a big way, right? Massive sell off here in NVO. Novo Nordisk, seeing considerable drop there, right? So if you wanted to be, let's say, a buy biased individual, I could see that being way beyond 3 ATR. So Novo Nordisk, with this nice, very fat drop, essentially from 105 to 85 in a very short time span, in open waters, right? Not earnings, not anything like that. Might have had a failure. There might be news associated to this failure due to news, but the sales, then buyers are stepping in, so you can almost do a buy bias at 85, or break above high of that candle and then stop out at the low. It's something that I actually wouldn't mind. When you see stuff like this, if it looks like, oh man, like that is just gross, right? Then yeah, that we could see that as a potential reversion to the mean trade. When you see just a massive candle like that, that is something that cannot be overstated. If there is opportunity for things that are low to go lower, but again, you shouldn't be risking more than 1% of your portfolio on one trade ID anyway. So, with a massive pullback like that, when there's blood in the streets, you need to be buying, and this definitely gets people's heart racing when they see that, especially, especially if you were a buyer like here. If you were a buyer here and you see that, and then you're like, okay, I'll hold it, I didn't get stopped, and then boom, right? Protections are important. Limiting your risk is super important. So that's really good stuff. NVDA. Good news for NVDA, right? The first setup candle that's green. It is in an uptrend, right? Most of the other setup candles have been red there. We've been a buyer. This is what I'm talking about when I say buy bias when blood is in the streets. So when we saw this on NVDA, we just like, hey, we can assume the risk here. If it tests fair value and it starts getting above rotational zones, so we'll take that, right? Took a buy here, got stopped out. That's fine. But the very next couple of days, it kind of did the same thing. We already kind of had a buy bias there, so we're like, yep, we want to be in the stock if there's a rally and there's blood in the streets. Been dropping for almost 3 4 weeks. Most rallies and most failures, they're around 3 or 4 weeks. So looking to catch a rally, which we did, 3 week rally, and then 1 2 weeks of failure, and then a multiple week rally, almost a 10 week rally. So when you think about it, 1 2 3 4 5 6 7 8 9 10, it's almost a 10 week rally before you kind of hit highs and then kind of fell below. That 10 week rally was massive, right? When you think about it, it was a little pullback here, but it immediately kind of get back up there. So really a 9 week rally if you really want to be a stickler, 8 to 9 week rally, and we caught that because of a buy bias. So those plays are valid to a degree, but you have to look at the extremes. Not just because you want to be a buyer, like, oh, I want to be a buy bias, and that's my excuse. Well, no. I mean, you're talking about massive deviation. Massive. Let me see if I can throw that on the chart here. Expansion, contraction. Yeah, we'll throw that on there. Apply. See if I can expand that a little bit. So yeah, the deviation is well outside of 3, maybe 4 standard deviations, long term, not short, not even short term, long term at that position. So overextended is an extreme understatement, right? This thing is like snapped to the downside, and you're catching it, where you can be biased, significantly biased. Even here, it's well within the range of our deviation, brand new at long term 3. This is almost 4, borderline 5 standard deviations. So because of that, I felt very comfortable in saying, hey, I want to look to be a buyer there of NVDA. So that's what we did. And massive play. Very good stuff. We're going to look at E-Lily. There's a lot of them on here, but we're just going to keep going through the plays. If there's something you like, awesome. If there's something you want us to kind of focus on and touch base on, put it in the comments. But essentially, this is what we like to see. E-Lily coming in negative, then there's a nice rip. Let's see if there's a position for us to take a play in there. Right, really didn't show its hand until right here, right? And then that play was in full effect. You saw that there was a stop out here. That's because the trend recently changed, and when it changed, we adapted to the trend change. You don't know when the trend's going to change, but you do need to know what to do with your rules. So bend your rules, but don't break them. Once we got that gap, we want to let it go and avoided all this when the trend changed. Now, when the trend changed, also you get a setup candle here. 1 2 3 4 break that. You could take the buy to the downside with a stop out at the high. Makes perfect sense because if it's going to complete the rotation, which it does, very nice base hit, blow out candle here, and then it starts to rotate back up. So you avoid all that with the setup, right? The setup's in play. There it is. There's your trigger. Take the failure down to the rotation. Very nice base hit. 3 days, you get your money. How much money are we talking about? You're going from essentially 800 or close to 800 all the way down to the close of the blowout candle, which is 726. I think you'll be okay with that $70 move. Just telling you right now, I think you'll be just fine. So seeing that, you can let it go. Do it. Did we talk about Mr. Lin? If we did, we can talk about it now. A nice rip, but you could take this as a follow through, but it's a little late on our edge. It just kind of happens to work, right? Talk about that one. KO Coca Cola. So shout out to Coca Cola there, right? In a downtrend, that three negative three ATR zone. Kind of barcoding a little bit. So it's not what you want to see if it looks like there's kind of a potential for setting up a zone on the low end, because any break or failure of that, it could really run to the downside. And I don't want to see that for that long-time manufacturer of America's favorite soda, Coca-Cola, right? But showing this rotational here, watch out for breaks above and below, right? I'm not really seeing we'll see a setup candle. So, but it's a never land. We want to kind of see that as a test here with a buy, boom, rip. That's kind of what you want to see. But it's a negative territory, so we're looking more for something like this, right? It rips up, 1, 2, there's your play, and it rips down to complete this rotation. JP Morgan, XLF, right? So shout out to XLF here. Again, kept saying that this is a pretty key player, but in the moving average cloud on the weekly, in a very clean uptrend, right? We want to see it get above this Fed candle. So no peekaboo stuff. Really actually get above it, and we can take the play. There was significant buying there in JP anyway. So we wanted to know if it was gonna follow through. It did not. That's why the alerts are here. If it breaks, we want to see if it tests there, and we were gonna look to see that gap close. That's really why the alerts are there. We wanted to see if JP Morgan would get down to the gap close. But if you're going to step in here and buy, this is definitely one that you want to keep on your radar for sure. Oh yeah. Oh yeah, baby. Look at that. So massive buying here on JP. And then after hours it's already stepped in. So Monday could be eventful. Watch, keep this one on your list for sure. Johnson and Johnson. Definitely one we made a ton of money on already. And end up closing, I believe, because it expired. Let me go look. Expired on the close, right? 1, 2, 3, yeah, about essentially the whole play rate scores almost dumping out at the end, right? So we held the whole contract, rolling it several times on the way down for juicy profits, right? So we got Johnson and Johnson here for a down position, and then rolled it once, two ice, and three times. Unbalanced volume being red. Very nice play to the downside, and it kind of treaded water. So some of these tread water plays to the downside can work. Ideally, you don't like them. I like it to catch it on the rip, but it worked in this case, right? Johnson and Johnson gave a slight rip. That's the only reason why we felt comfortable, right? It was a little bit of a dip, right? And then you see some buyers step in. So with the setups of the buyer stepping in, with this one kind of starting the momentum to the downside, massive dump, took the first roll at the first sign of danger here. Boom, blow a candle here, roll, boom. As it fell some more, we were like, oh wow, that's crazy. Took the roll again, and then the expiry, we end up having to close, right? So almost at the bottom. But anyways, it was buying pressure is already starting to step in. So General Motors is on here, and then we're gonna look at Google. We have a lot of setups going after the Fed meeting, so we want to cover them. General Motors is in an uptrend. Shout out to General Motors. We do have a setup here. You could say that kind of the same thing. If it crosses above high, we'll take it with a stop out at the low. Not something that I like. I like more of the red setup candles for my setups. GIS. Are you in an uptrend, sir? No, you are in a downtrend. Downtrend, Johnny, right? So you're seeing that the rip Didn't really show a green candle. No one got extended. These guys kind of here at the bottom of this mini rotation there. Boom. And then a failure. So not really anything I'm interested in. EXC downtrend. Slight rip with red setup. We can mark it. Not necessarily. I mean, I'm looking for more of a rip, right? A real rip, right? Not a baby rip, right? Look at that. It's a Never Never Land. If you can rip up to the moving average cloud, that's what we want to see before you fail. But yeah, we'll take this off. I don't want to kind of spook me into jumping on it. Take off some of these R's. ETN. See if there's some more juice on that. Yep, there is. Look at that. So ETN. The Fed meeting candle is still in effect there. Don't want to get peekabooed by the first setup there because the Fed share candle is the one that we're watching to get above that 50% mark. ELV. Downtrend. 3 ATR. Look at that. So there it is, right? Coming into the pivot there. Look at that. Very nice. At that 356.31 pivot. Almost consistent with potentially a buy bias. Okay. Almost consistent with a buy bias there. But you would still want to see some kind of setup. So even with the rotation, you could almost say I could take a buy above this setup candle to get real maximum momentum if you wanted to be safe. But the first setup candle would have peekabooed you in anyway, and you already got stopped out. So leaving a little extra room on the setup would be nice. EIX. Looking good, Edison. Let's see. Ooh, in a downtrend though. It's a new one. We're gonna mark it. Looking for more of a rip though, so we'll just be patient. We'll wait for our setup to be in the moving average cloud, and then we'll think about it. Yeah, there's not really enough there, guys. Right. So this rip is we're looking for a rip like a pivot rip, not necessarily a 1 day rip off the morning star. I think we already talked about this one. Oh, EA. And then we'll go back to Duke Energy. So there's EA. Shout out to the gaming company. In a very uptrend, right? Nice pullback. We like that. We like that it gives very nice juicy pullbacks there. Maybe a little too much of a pullback, but we'll see. We'll go ahead and walk this puppy down. So we'll see if it breaks above that setup candle there on the red side. And then if it does, maybe this candle can start to rally. This will be below the stop out of our low. If it can go from here and trigger above the high. Duke Energy, right, downtrend. Not really a rip. Not really looking to take that position until he gets up a little higher. We don't like it in Never Never Land. Disney, kind of nice on the rip there. We would need for it to cross above here. Look for a base hit, complete rotation to the upside. They respecting all your buyers. Stop out at the low. At the maximum, you could extend it below here for the stop out. But that's about all you can do. DHR. You could see that it ripped up here and then failed, but at 3 ATR, not necessarily looking to take a play there. DHI, nice rip. Look at that rip, man. DHI doing very neat. Yep, there's a nice, very juicy opportunity in DHI, right? Comes in, rips 1, 2, 3, 4. There's your play. Stop out at the high. Nice follow through. That's what we want you. We want to show you these. That's what we want to see, right? Use your discretion, as you see. DE, I think it's John Deere. Yep. Very nice green setup there. By the dip is in play. If we can get a nice dip, right? Let's see here. Is there an opportunity? See, this is what I'm talking about. Like you can see this little, it's weak and it doesn't really go anywhere, right? But as you see, it takes a very nasty dip. This dip is pretty pronounced. Comes in, start throwing setup candles all over the place. This one, if you catch it, you would have caught a very nice rip, right? You could take this one, get pushed in, and then you stop out the low, which it does, and it doesn't really trigger you back in until this candle. So you get one stop out, and then you get one entry for a very nice rip, right? Yeah, that definitely, I think you could take this one stop out to trade for that. Okay, going from a 391 to 469.39. Think you can make that trade, right? Let's hope so. You've got Dominion. So Dominion in a downtrend. So we go to the little bit of a slight push for a setup. I wouldn't necessarily be looking to take it in this position. It's in Never Never Land. We wanted to do a little bit more of a rip. So we're seeing a lot of that. So we're not going to make those our priority. We're going to prioritize uptrends. Cisco, green, very, very nice setup candle here. But again, we're looking for the red ones. CRM, uptrend, same thing. Looking for the red ones. Cost. Uh-oh, a little bit cost. Costco. So there is a red one in play on the dip. So we'll go ahead and mark that. CMG. Chipotle, some people like to call it. Nice dip. It could be the start of a trip back up to the upside off the pivot. But be mindful. Look at revenue sales for this quarter. They are coming up, so just watch out. Comcast. So you got Comcast potentially on a trend change here real soon. Yeah, I'm pretty sure it's going to be on a trend change, right? Nice rip to the downside. Couple of days of bounce, and this is even before the Fed chair meeting. So Comcast is kind of struggling. Things are kind of moving into the digital age. So Comcast having a hard time keeping up, but their internet services are still pretty good. So they're not out of the woods quite yet. CL is had a rip, but this is the only indication that you get for a potential follow through on the failure. So not looking for much there. CEG, I think we talked about that. Talked about that. Let's go look at BlackRock. Uptrend, followed on by a green candle. Not bad. I think it repopulated most of these guys, which we already talked about. So yeah, guy, there it is. Thank you guys so very much. You guys are awesome. Sorry about the length of this one, but there was quite a few, and we don't want to let anything slide by the wayside, guys. Remember, for longer term buys, SPY, just kind of to recap the major parts. Wanted to see get above that 50% mark on the Fed share candle. Qs, same thing. IWM is a canary in the coal mine. So if you can get above that, truly, I think we're in good shape. Even at IWM, if it starts to fail, you could look for a rotation and some weighted pressure on the SPY to kind of follow through with IWM. So you guys have been awesome. Appreciate your patience and sticking with it. You guys have a blessed day. I'll see you on Monday. Have a good day and goodbye.